Welcome Matthew Bishop, The Economist, Charles Cascarilla, ItBit, Chris Church, Digital Asset Holdings, Brad Peterson, NASDAQ, and Sandra Rowe, CME Group.
Love it.
Well, good evening. Nearly time for a drink, but before we get there, we will have a stimulating conversation about payments and settlement. It's that kind of conference. To do that, we have a great panel. To my immediate left is Chad, who really is a big disruptor in the industry, and one of the startups that's come in and got a banking license and got inside the mainstream. Next to him, Chris Church, who is with one of the companies that I think is really creating a tremendous buzz at the moment as a startup, Digital Asset Holdings. Brad Peterson, formerly of eBay, among other things, but one of those people who's come from Silicon Valley and now at NASDAQ in the heart of the what might be called the dinosaurs of the industry, but he'll tell us that they're not, that they're one of the great disruptors. And lastly, Sandra, who is at CME, which is, again, one of the old firms in the industry that's trying to figure out what this all means and maybe how it can shape that future. As I think about this question of how far blockchain or other distributed ledger technologies is going to disrupt the mainstream financial services industry, and how far in turn that will affect the broader economy and what goes on there, and how, to what extent this really is the revolution that we, I guess, are all here to be part of. I can see three scenarios, and I want to ask each of our panelists in turn to give their thoughts about the likelihood of each of those three scenarios. One, I think, is this very, the inspirational scenario that many people who have become real blockchain hardcore believers believe in, which is that this is going to be the chance for the internet, for the digital economy to really get it right in a way that the first wave of the internet didn't, because it will allow this power to be decentralized. It'll get rid of a lot of the intermediaries that are currently in here in the system, ripping us all off, and it will allow for a massive sort of opening up of commerce in a way that will really radicalize how the economy works. The second scenario is that the incumbents in finance are waking up much more quickly to the potential dangers of disintermediation that are out there, and are going to own the process themselves. They're going to create these rather closed, insular blockchain or ledger systems that will effectively allow them to get many of the efficiency gains, but probably keep most of the profits, and that it won't have some of those revolutionary benefits, and it may actually stop the broader blockchain, the open blockchain system that everyone's part of, really happening. And I guess the third scenario will be that this is all massively overhyped and not very much happens at all, and we're all sitting here in 5 years' time wondering what that was all about. We know that there are massive stakes here. I heard Larry Summers last year estimate that about a third of all the revenues and profits in finance came from intermediation, and that much of that possibly could be wiped out if that first scenario comes to play. So I want to ask, I'm going to start with Brad as the man who's moved from Silicon Valley into Times Square, if not Wall Street. How do you see those three scenarios, and what are the biggest factors that are going to shape which of those come to pass?
So let me take on the third. I do not believe that this will, in 5 years, will say nothing happened. So I would take that scenario out of the picture right off the bat. I would say that unlike the web, when everyone was very excited about the possibilities, some of the financial services firms were lagging significantly. So that is not happening this time. A lesson was learned. It wasn't that long ago, and there's amazing engagement at all of the board levels of the major financial institutions. So that I think is, what becomes of that is still yet to be, and I think the panel can, and my other panelists can certainly opine on that. I do believe there is going to be, and this is the excitement I saw at lunch, meeting some of the folks, and I'll maybe talk about one individual I had a discussion with at lunch, but I think there are going to be some major business models that are created that we haven't thought of, and we talked a little bit in preparation about how Amazon created, there was the whole bricks and mortar debate, would retail stores go away with the web? And certainly they haven't, but there's a massive company in Amazon that was created. So I think there's going to be some very exciting new business models that emerge, and I think the incumbents like the retailers with the web are going to use this as an opportunity for major overhaul and modernization. Both are good. I think both create value in the economy when you have new business models. And then financial services just needs a lot of work in modernization.
We were talking a bit beforehand, and you said that one worry that you had was that, I'm paraphrasing, that the dinosaurs may lock the system down. What
yeah,
do you mean by that?
I'm stealing that from a Brookings. We had a panel down in Washington, and there's the risk that with regulated industries that there are rules that lock in, and someone, it wasn't me, so I'll give them attribution, said there's a risk that you lock in the dinosaurs, and I think that is something that I think the regulators are very engaged in this, and I hope that isn't the outcome. So maybe some of the other panelists.
Yeah, I'm going to move to Chris and ask him about that. I mean, as you've worked for Swift, among other things, and I mean, how do you view those three scenarios? The likelihood
I think
of them?
first and foremost, I think everybody in this room will agree there's certainly a lot more hype than perhaps is justified. But I think, as I hope everybody in this room also recognizes, no smoke without fire. There really are some tremendous benefits that financial services and other industries can glean from this technology. When it comes to specifically financial services, this debate about dinosaurs, a lot of people use the term disruptive, and it's going to destroy this institution or destroy that institution. Our belief is a little bit different from that. We believe that it's going to be transformative for financial services, and the reason for that is there are a lot of really powerful drivers. It will be disruptive, but it will be disruptive to processes, maybe not and probably not in the short or medium term to the institutions. Now, that's a generality. You mentioned the bricks and clicks discussion. I think we'd all probably cast our mind back to 1995. There was a whole debate about banking then and the internet and what was going to happen, and the death of banks, and bricks are going to disappear and clicks are going to take over. Well, that just didn't happen. It really didn't happen. Now, every bank has a really good online presence now, but there's still plenty of bricks around there. Now, were there some casualties in industries as a result of the internet? Absolutely. Take Blockbuster, for example. That doesn't exist anymore. So there will be some businesses that go away. But in the main, big picture, many of the financial institutions, the intermediaries that we know of today, we believe will still exist. We believe that the processes will be disrupted. And back to, I think your final point was, one of the big drivers behind that is in fact regulation. Regulators have spent a long time since 2008 making sure there's a secure, a reliable and sound system, trying to take risk out of the system. I don't think anytime soon, and it'll be interesting to hear on the panel tomorrow what some of the speakers say tomorrow about this, but certainly our belief is that regulation is going to preserve some of the institutions that people say were going to disappear. It will, for example, take an act of Congress to change the role of the DTCC, for example. We think the role of the DTCC is going to be, it will still be there, but will some of their processes get transformed and changed? Absolutely. And I also think that many of those, quote, dinosaurs are actually going out of their way to kind of figure out this new paradigm. And if you take, and I don't work for DTCC, by the way, but if you take a look at what DTCC's done, they ran a fabulous symposium. They've invested in a blockchain company. They've put POCs out there. They really are getting with the program. So there are people who really are looking to see how can they transform. So transformation, yes. Disruption, no. But disruption to the processes.
Brad, you wanted to come back on that?
Yeah, I just want to add one point. As I think about the folks that really capitalize on the web, so you have USAA that had a major business problem, and they were able to overcome that problem, and that's how do they connect with their customers when they have no branches. So they were the ones that saw the web and the enabling communications innovations to connect with their customers. They were one of the first firms in the line to buy an iPhone, because they knew that was actually a new way of connecting with their customers. They had already done the check deposit with the Panini scanners. So they were overcoming the disadvantages they had in how they served their customers, whereas the big banks with the ATM networks and all the branches just didn't have the business problem. So I think there's a lesson to be learned there. The companies that don't have the infrastructure that they have to worry about disrupting and the economics of how do I cannibalize my business, and someone who is sitting right positioned so that they can do the USAA or the Amazon move, it's going to be a big sweeping part of financial services that will come out from the incumbents. So I think that would be a prediction I would fine tune. And
yeah, just to come back, Chris. I mean, I guess between my scenario 1 and scenario 2, in the open scenario, some people are predicting that most of the revenues and most of the profit from intermediation in payments and settlements could disappear. Whereas I guess scenario 2 is if the oligopoly of the banking and financial system manages to get its act together, it could actually maintain a lot of the revenue and a lot of the profit, in fact, maybe increase its profit by just driving cost out. And I wonder how do you see there being much revenue in payments and settlement, much profit in that area?
So I do think that the banks are challenged. They're challenged on return on investment, return on equity. Clearly, revenues are not going where they should do. Margins are not going where they are. The cost of capital is going up. Regulation is putting up costs too. So it's not a great place. And interestingly, that's perhaps one of the reasons why this technology is taking hold in the C-suite, and why everybody in the C-suite is asking people, probably many in this audience, go figure out what does this mean to our business. So there's absolutely a lot of people looking at what is the impact of this going to be on their business. Yes, there may be some revenue. The point about processes and transformation is that some of those revenue lines may reduce, but others will increase, because just as back in 1995 we didn't know everything that the internet was going to bring us, back in 2015, 2016, when people started to wake up to this technology, we also don't know all the revenue possibilities. But certainly some of the financial market infrastructures we're speaking to see the transition to a blockchain environment as a platform on which new revenues and new services will be gleaned. And we believe that's absolutely going to be the case.
Now, Sandra, you're one of those people, a CME has said, go away and look at this. I mean, tell us about how there's different scenarios.
If you allow me the liberty, I'm going to take a slightly different view from your scenarios. I see a scenario where never in the last decade, at least since I've been in banking, has there been an opportunity for new entrants to come in, albeit regulation is very strict and onerous. Never have I seen a better opportunity for there to be new players to come into the market and take pieces of lots of different pies in banking, in trading, in all sorts of areas in financial services. I think actually the scenario we're going to see is one where the incumbents who manage to adapt the quickest will get bigger. The ones who don't will end up like a Blockbuster or Barnes & Noble, unfortunately. And then you're going to get the new entrants that we don't even have today. I'm not even sure they exist yet, like who will become the new Amazon bank of financial services. I see the confluence of mobile technology with the advent of blockchain and crypto and digital assets all coming together in such a unique fashion at a time when the confidence in the financial services sector and also just the cost structure of the financial services sector is suboptimal. To me, this is the perfect storm.
I mean, you're an institution that for a long period of time, resisted modernization. I remember, writing time and again, would there be would the trading floor ever go, and that kind of thing. And now, I mean, how does an institution like that get someone like you to to think about these issues, and what's your mandate, and how are you, if you come back saying, well, we've got to change everything,
Right.
how are you going to sell that process?
So I'm not sure that everyone's aware, but I like to actually say that CME is the ultimate big fintech company. We're 30+ billion market cap on NASDAQ. But we're actually only 2,200 employees globally running something what we call Globex, which is our matching engine. And that is the engine that runs all of our trading operations. And we do something in the neighborhood of 16 to 18 million contracts a day in the futures markets and options markets across asset classes. So for me, we have evolved from the trading pits. People could not process 18 million contracts a day. They just could not physically. We'd have to have an army of people around the world. We're closing down our pits. You've probably heard that the NYMEX options pits are closing soon. Last year, we closed a majority of our pits in July out of the CBOT. We are evolving. We've gone from pit trading to electronification. Most of it is now 90+% electronic trading. We're going to go from electronic trading to digitization. And this is one thing I tell people all the time, which is people trade no matter what. People like to trade. So that way of trading might change. It might be on mobile. It might be, some other type of trading. But people will continue to trade. And it's our best interest to actually evolve with that. And so we'll continue to do that.
Chad, how about you? How do the three scenarios look from where you are? And I guess I want to come after you said that to ask you a bit about, per the regulation discussion, why you felt you needed a banking license and how that alters your view of your ability to play a role in the transformation.
Yeah, look, I think it's a bit of all three of what you said, which is it's going to make a lot of changes. Yet I think it'll be disruptive, but there'll certainly be a variety of incumbents that will, in fact, thrive because of the changes. And then in some cases, we're going to be surprised how little things have changed in certain areas in 5 to 10 years. It's kind of all of these things because at the end of the day, I think of blockchain as ultimately it's just a database. That's all it really is at the end of the day. That wouldn't be a great conversation topic for most conferences is to say, hey, I got a new database. But that's really what it is. And
can it really be only that?
Yeah, well, it's more. But I mean, if you really wanted to be, cheeky, that's what you would say. I mean, certainly it's a network database. How do you apply this new tool, and to what problems, right? And so the problems it's going to be applied to are ones where it can make a difference in the near term. And then over time, as it gains both credibility and people gain a facility with it, it'll then apply to bigger and bigger problems.
So where are you seeing the biggest opportunities now?
Well, I think you're really where you're addressing a couple things that make a difference. At the end of the day, Wall Street works on comp cycles. So if you think you're going to change a cycle of adoption over a 5 or 10 year horizon, I think that's probably a possibility, but not necessarily a probability. But if you can say, hey, we can address certain processes that matter over the next 12 to 24 months, that's a time horizon in which you get enough payback because firms are pressured on an operational basis. They're pressured on a capital basis because of Basel III and Dodd-Frank. So can you basically show me examples of how you can implement this in a way that's cost effective as opposed to say, hey, let's rip out all of our systems and start over. It's never worked that way. We may get to a point where that is where the world's at, but that's not going to happen in the next couple of years.
So as you look at the next couple of years, what does that logic tell you?
Well, I think it's individual markets on a basis. So first of all, where do you want to use it? We're focused on financial services use cases. That's hardly the only place you could use this in healthcare. You could use it almost anywhere, right? Identity management, you go on and on. So we focused on financial services, particularly we're focused on certain markets that are already decentralized. An example would be the gold marketplace where we think we can make a difference in a very near-term basis. And so that's an example where we would apply it, but it doesn't mean that's the only one. It's a huge world out there. Post-trade is an $85 billion marketplace. You could change how bonds are issued, a whole variety of ways to go about this. You saw what happened with Delaware today around offering corporate shares. big opportunities, lots of ways to change things, but if you said the whole world's going to look different in 5 years, I mean, that may be the case, but you could also make a pretty plausible case that it wouldn't have changed that much in 5 years, but there'll be examples of how things have changed profoundly.
I mean, I suppose the issue that I hear brought up a lot when people look at financial services and say how quickly could it be disrupted, when we look at how other industries have been disrupted, they will say the biggest difference is you have this very conservative regulatory framework, and a framework that's become more conservative and more onerous post the crash of 2008. And I mean, I'm interested as someone that's got this new banking license, essentially. I mean, how important is that in enabling disruption? And do you think this regulatory conservatism is going to stop faster change elsewhere?
Yeah, well, the reason we went about getting a trust license, which is, as you said, very similar to a banking license in all effects and purposes, is because having the technology and marrying it with a regulated entity allows you to solve problems in a different way than if you're just providing a technology solution. That's not necessarily good or bad. It's our take on how we would apply the technology. And so we can do unique things by having access to the financial system and also having a technology solution. And so that means your ability to hook into whether it's SWIFT or certain depositories are greatly enhanced. We have an account at the DTC, for instance. We have our own SWIFT code. These are kind of unique things that we have. That doesn't mean that's the way everyone should do it. It's still kind of the way we've approached it. Again, it's a big world out there. There's lots of ways of going about it. We've definitely taken, I think, a unique tact. And it took us quite a long time to form our trust. It was over almost 2 years of going through processes and putting capital into place. And we have regulatory capital, regulatory exams, regulatory filings, just like any well-regulated institution, financial institution. That's a double-edged sword, depending on what perspective you're coming at it from. And while we think it's great for our business model, you could understand why someone doesn't want to go through that exercise in headbanging.
Chris, I mean, what do you think? I mean, is it possible really to disrupt this industry without being somehow on the inside?
So first of all, I think Chad is on to something which I think is certainly a message and a takeaway would be, think of this, loads of hype, think of this at its most basic level. This is an immutable database. It's a fancy version of database. There is a promise of lots of sexier things to come, but not all of those are realizable today. Will they come in the fullness of time? Probably yes, is the answer. Will it transform industries as a result of that? Absolutely. Can you adopt it now? Absolutely too. We are engaged with the Australian Stock Exchange, who have a clearing and settlement system called CHESS, and they're looking to figure out how can they replace that. And they want to be able to do that in a very short time frame for all sorts of drivers that they have. And we can actually take them from where they are here, which is a technology that they use, which works, by the way, but is in need of replacement, to using distributed ledger technologies, similar but different. And we can, in the first phase of distributed ledger technologies, give them some significant benefits to clearing and settlement. At its very most simplistic level is the reduction of the cost of reconciliation. Because if you actually can have an immutable database that everybody believes in and trusts and cannot be interfered with, that dramatically reduces the cost for all the participants around reconciliation. So at its most simplest level, it's a new form of database that will give the industry reduced costs through reconciliation. But there's a lot more than that. It gives it increased security. The promises are there for the taking. But phase 1 and phase 2, we've still got work to do with some of these.
But again, I mean, back to the regulation issue. I mean, do you feel the regulators are going to be obstruction, sort of obstruction, or are they going to be driving this forward?
Well, so interestingly, all the regulators, just like the C-suite of all financial services firms, are conducting exercises, writing papers, doing studies, trying to figure out what is the implication of this technology in their respective domains. And it's not often that a technology like this comes along which it can solve so many challenges in a post-trade financial services world. And the regulators, once they realize that you're not talking about Bitcoin, the currency which they don't like because they can't control it and all the obvious reasons that are out there, anti-money laundering, etc. Once regulators in financial services realize that this is a group of technologies that can actually bring positive, transformative benefits to an industry that really needs to have this transformation, they get rather excited and interested. I think that right now there are some, for example, the Australians. The Australians are very vocal about their belief in this technology. ASIC, which is one of the regulators, have gone on record. The chair of ASIC, Greg Medcalf, is also the chair of IOSCO, has been very vocal about the promise that these technologies can bring, the benefits to financial services, and that this is good from a regulatory perspective. Now, my words, not his. I think there is still an underlying concern that what are the unintended consequences? Because you can still operate in a regulatory framework using distributed ledger technologies, but is there an unintended consequence? And I think that still needs to be worked
And
through.
how does London or New York compare with each other, and maybe Singapore? And are they getting religion in this respect as much as Australia?
I would say the Australians are right up there. All of the jurisdictions that you mentioned, Singapore is of note. The Canadians are also looking at this stuff. So the Brits are really, they're looking at all sorts of things, from digitizing pounds and all sorts of things. So I think all of those jurisdictions are really on board with, hey, there's something here. We've got to do something around this. And even to the response to the CFTC. Said at the DTCC conference a week ago, no harm. Let's kind of take the approach we took to the internet. Whether or not that's realistic and achievable, and whether or not other regulatory agencies in the US chime in and take a different view, I think right now they're trying to figure it out. But there are tremendous benefits to regulators in terms of transparency. With this technology, you can either, because of the nature of transactions and the privacy requirements, you have to be able to say you can just see a transaction's happened, but you can't see what's behind it. But regulators might want to see everything. So with this technology, you can either give people full access, partial access, or no access to the underlying data. That's very powerful for regulators, especially when you've got a regulatory regime which is saying, I need more transparency, I'm worried about the ultimate beneficial owner. And by the way, one thing we haven't mentioned is they're worried about cybersecurity too. And this adds another layer of security. If you pick up on Chad's point, this is only a database. Right now, databases have all this perimeter security around them. A distributed ledger is a database with that perimeter security. But by the way, all the transactions are cryptically encoded, so that adds another layer of cybersecurity.
So, Brad, NASDAQ's very ambitious in terms of where it can see the opportunities for blockchain technology. What do you see as how do you decide where you focus first, and what are the forces that you're most worried about that might stand in your way?
So I always like to look at what's going to benefit the customer. And in the investment world, everyone in the room is an end investor, and the other side of that is the issuer, and that's the part that we play. So companies raise money, and many of you in the room have gone through that process. You know what happens. You raise money, you raise a series of rounds, and you aspire to become a public company. And that whole process has elongated, and there's companies out there. So you look for the kernel of what is going to motivate a customer to change their behavior. And you see some of the leading companies that have great business models that are starting to think about, maybe we don't want to go public. So we're building a system that allows you to be ambivalent. So it's good if you go public. If it's good for you, it's good too, and you can get access to the capital and stay private forever. So I think that's a major shift.
And this is using smart contracts and things, is it? Or?
This is just a potential alternative marketplace. So you could end up with getting all the benefits of a public company without going to a public market. And the things that have happened to those issuers are activism. You've got Sarbanes-Oxley. You've got a lot of overhead and a lot of risk by exposing your business plan to everyone, all the disclosures of it. So there's a fundamental shift in the one of the main customer benefits is, I really want to raise money, I want to build a great company, but maybe there's an alternative way. So we're listening to that. And then where I came from, I was at Schwab, and Schwab was very much founded by a leader, founder-led company that was looking to benefit the end investor. So very much different from a different approach that was technology-based. I think a very similar culture to USAA. They have their members. They really focus on benefits for their members. So if you want to look for evidence of change, and I think timing is the key variable here, is how quickly will these things change, and you need to get the timing right. So look for the end customer. Everyone else in the middle is not serving the end customer. So I think the end customer doesn't go away. There's going to be great companies, issuers that need access to capital, and in the end, the capital comes from end investors. And all of the rest is at play. So that's what I would say. Everything in between could be re-engineered to some extent and be much more efficient.
Now, Sandra, we had this $87 billion post-trade market. I know you're looking a bit at that. Where do you so far see opportunities for change in the post-trade environment?
Yeah, I think everyone's focused on post-trade because there's some obvious low-hanging fruit, whether it's settlements or collateral movement, margining, reporting. There's a lot of functions that could be improved. But I think the way we're approaching looking at each of those processes and whether we apply blockchain or not to them really is the so what question. So what problem is it solving, or what customer experience is it improving? Is it saving money for us or for the client? If it doesn't start answering a lot of those questions, you do start asking that question, so what? And we've started looking at a number of different technologies in the distributed ledger space. And obviously right now there's nothing enterprise grade. There's nothing that could do what we do today, which is to move around the amounts of money that we move every day, as well as the number of contracts that we margin twice a day or transact twice a day. So I think we have a long road ahead, but I think what we are willing to do is look at the startups and the fintech firms that have promise. Look at the industry bodies that are looking to truly knit together the global framework, at least the best we can. We're willing to support that. And so where
you're involved in this Linux standards operation. Can you just talk a bit about that?
Yeah, so one group that we are recently joined was the Linux Foundation Hyperledger project. And we're one of the governing board members. And if you ask why would you do that? I think, for us, this is about trying to create open standards, looking to bring not only financial services together, but fintech firms, big and small, every industry, not just financial services. And if this grand experiment works, then we do that. If it doesn't, then we'll have to look for something else. But I think we need to keep trying. And I think that's the most important thing for us, is to try to bring the various groups together, hopefully to create a common fabric. We'll see.
Great. Well, we're almost out of time, but we managed to get through an entire panel on blockchain without anyone mentioning Bitcoin, which is interesting because I see in the wings Glenn Hutchins ready to come on and talk about does Bitcoin still matter. So I just want to end by setting up the talk for him by asking each of you your view on, is Bitcoin something now for the history books, or is we just focus on the ledger technology and so forth, and we can forget about Bitcoin? Does Bitcoin still matter? Chad?
I think it absolutely matters. If you go back to what I was saying earlier, Bitcoin is a type of distributed database. It's a particular one that's open, public, anyone can access it. In some ways, the price of Bitcoin is price rationing access to that database. But the Bitcoin database doesn't solve every type of use case, so you got to pick how you use it, and there are definitely some great use cases for it, but not all of them.
But will the databases that really make it be the Bitcoin blockchain database, or do you think most of it'll be the other sorts that win in the end?
Well, I don't know what win means, but if you said, hey, where are most of the world's assets going to go through, I'm not sure it's going to be the Bitcoin database, partly because of design in terms of how it was constructed originally. Maybe you'll be able to solve for some of the limitations. People are trying to do that. There's a lot of design challenges ahead for Bitcoin and frankly any other public database, public distributed database, but I'm optimistic that those will be solved, and I think the Bitcoin blockchain will be the vehicle for that.
Chris, quickly.
Blockchain matters because it's what really brought the realization of this distributed ledger technology underneath it. Will Bitcoin survive and thrive? I'm not sure, but it's certainly got a lot of people thinking about how can you use this technology for good in lots of places, financial services and beyond. And I also think that wherever Bitcoin goes will also act as a catalyst, not for change in just financial services, but I think it will also spur a discussion at central banks as to should we be digitizing fiat money, and that could, in fact, drive, and that could be good for Bitcoin or bad for Bitcoin. That's a whole discussion. But yeah, it's been a very good thing for the industry because it sparked us off in a journey which we're on now.
Brad.
So I'll give you a crisp yes and say that I think that one of the big companies and big opportunities could be in the Internet of Things when we're talking mediating between devices and scarce resources that are not involving people. And I think some of the work we saw earlier, heard from the Lightning team, they're here and they've got some pretty cool stuff going. So.
Well, last word to you, Sandra.
Well, I think it goes without saying where we stand on Bitcoin. We just announced this morning that we will be launching a Bitcoin reference rate and real-time index. So.
Great. So a range of opinions there. I hope we've been a good warm-up act for Glenn Hutchins, and look forward to his talk. I'd like to thank the panel for covering a lot of ground very quickly around the future of payments and settlement, which I think one thing is clear, it's going to be very different in a few years' time to what it is today. Who will profit from that remains to be seen. Thank you.
Thank you.